Good afternoon, everybody. Going to go over our Forex trades for today, Wednesday, October 15th. We had 5 trades, pulled out 38.5 pips. Basically, we'll show you how we did it. First trade you're looking at here is New Zealand dollar, US dollar. We got a signal to go short this around 0.78197. By the time we averaged in, it was 0.78157. It was getting late at night. We picked up a quick 5.2 pips. It was coming into an area that could be viewed as support. It didn't even quite get there. It got within about, about 5 or 6 pips of it. It did hold that and bounced. We picked up the 5.2 pips. We wanted to get out. We wanted to be, flat, going to bed and whatnot. At the same time we had this signal, we got a signal in US dollar Swiss franc, I believe it was, which in the US dollar Swiss franc, the US dollar is the lead. In this one, the New Zealand dollar to US dollar, the US dollar is the trail. The New Zealand dollar is the lead. So, not that those two currency pairs are going to move completely in correlation with each other, but if the US dollar has a big rally, then you'll see US dollar Swiss franc go up, and you would see New Zealand dollar US dollar go down. Conversely, if the US dollar sells off, the US dollar Swiss franc will sell off, and the New Zealand dollar US dollar will rally. So we had these signals at the same time, although the trades didn't go off at the same time. We got into the New Zealand dollar US dollar prior to US dollar Swiss franc. Probably half an hour, 45 minutes, maybe up to an hour. We canceled our US dollar Swiss franc because we don't want to double our exposure. I hope you understand that. So, you're basically doubling. If you're going to go short this one, New Zealand dollar, US dollar, and long US dollar Swiss franc, you're basically doubling your exposure. If you're going to short New Zealand dollar, US dollar, and short US dollar Swiss franc, then you're not quite doubling your exposure because one of them is going to win, one of them is going to lose, basically. The signal that we got was short New Zealand dollar, US dollar, long US dollar Swiss franc, which means you're doubling your exposure. So we wait until one of them gets triggered. We're piecing in. If they both get triggered at the exact same time, you can always get out of one of them real quickly because you're piecing in with a small amount. It's not going to cost you much money at all. So as it turned out, this one we got into. We canceled US dollar Swiss franc. Looking at the chart, US dollar Swiss franc, like I said, you would have got hit about 45 minutes or an hour after this initial position got put on. So anyway, that's why we didn't get involved with the US dollar to Swiss franc. As far as this trade goes, we pulled out the 5.2 pips before retiring for the evening. It was, like I said before, coming into an area of support. So if you didn't cover it, this huge move up here was the retail sales number that came out this morning on the East Coast at 8:30, which was a horrible, horrible number. And markets markets got hammered this morning at the open as far as equities go, and the dollar got destroyed as well. US dollar to Japanese yen, the pure scalping. We're going to have our indicator hopefully before the end of this week, or by the end of this week. It's already Wednesday. Keeping our fingers crossed that we could get it out to you guys. But it was a layup. We had 4 trades in this. US dollar, Japanese yen, as you see there. We'll go over them real quick. There was a trade here that was a short, 107.043. Came in nicely. We picked up 11.1 pips. It pulled in about another 10 or 11 pips from where we covered, so we left some on the table there. Next trade was a long, 107.076. We picked up 7 pips even. And you can see there she just continued to rally up to an area that could be resistance. Picked up 7 pips on that trade. Then we got a signal to go short, 107.218. Got out of this prematurely. Obviously, again, this one, it was getting relatively late last night. This was probably around 9 or 10 o'clock in the evening. We picked up 9.3 pips. We should have really held it if you look back, because you got to figure it's going to come somewhere close to the figure and the support levels, which is exactly what it did. We probably left 6 or 7 pips on the table there. And then, last night in cash, this morning, we get a signal to go short 107.174. This was around 7 o'clock or so, maybe 7:15. We picked up 5.9 pips, thinking, it's coming into an area of support. Again, at least when we probably should have waited to see if it would have hit the figure. But, it's a scalp. So, depending on how fast they're moving and stuff, you just want to get your profits and move on. And definitely want to be out of it before any big economic number coming out. Retail sales was coming out 8:30 a.m., which is a high volatility number. So definitely wanted to be out. If we had the guts to hold it, you see what happened there. And the thing fell 150 or more pips. So I think we did pretty good, 38.5 pips. You see what happened, what could have been, if that, could have picked up an easy 100, 125, 130 pips. But that's not our style, that's not what we're looking to do. It's pure scalp trade, just looking to get in, get out. So in the end, picked up 38.5 pips. So we'll take it and we'll move on until tomorrow. If any signals come out later today, they'll be coming your way. And if we do some more trades, we'll do a video tomorrow. Have a great day.